Nashville home buying demand just dropped 5%. Now, that's the single family contracts versus the same week last year. But it's the second week in a row that contracts have come in below last year. And based on some preliminary data, this could get much worse. I'll show you how. But I also have some questions. Is this the start of a weakening economy? Is this isolated to just Nashville? Is this just a reversion after a higher demand we saw coming into the summer? Let me share with you what I know, and then I'd love to hear your thoughts on what you think is happening. Single family contracts 4 weeks ago were 100 ahead of last year. This morning, we're 124 behind. This is down 5%. That's below 2025, below 2024, and below 2023. For a second week in a row, active listings, they're no longer growing at 9,864 single family homes. This is up year over year 5.6%, but it's only up about 20 from last week. The supply ratio hit 4.3. This is the ratio of active listings to contracts. It feels like about 4.3 months of supply. Meanwhile, the median sales price is $522,000. This is only up 0.4%. It's basically flat. So, is the economy weakening? Mortgage rates hit a one-year high this week. Freddie Mac has the 30-year at 6.55 versus last year 6.75. The year-over-year rate change is still a little bit lower, but it's less than a quarter of a point. This is the closest gap it's been all year. And I have a chart that turns that into a forecast. You take Greater Nashville data, the navy line is contracts versus the same week a year earlier. The red line is mortgage rates versus a year earlier, but we flip it to make it in line with the contracts, and then we push it forward 30 days. Rates move first, then contracts follow about a month later. The pattern broke only twice in 2.5 years. The tariff shock in April of 25, Winter Storm Fern this January. Both times demand came back in line with where the rate was within weeks. In February, buyers had rates 1.25 below the prior year. Spring contracts were up 12% ahead. Today, that advantage is less than 20 basis points, and contracts are now beginning to slip below last year. And this is a real problem for demand, because if we model out what would happen if rates just stay flat for the rest of the year, by the first week of August, they're going to be year-over-year positive, meaning massive downward pressure on contracts. Not only that, but if for some reason rates were to drop, which would ultimately pull demand back in, it would take months, because as rates drop, people slow down their purchase. That's what makes this especially alarming. If rates stay the same, demand is likely going to be lower than last year. If rates drop, demand is likely going to be lower than last year. I just don't see how we get out of this without a much lower demand, and that is without the economy weakening. The state of Tennessee has reported that a record amount of new businesses has started. We are constantly seeing good economic news, but something about this could get much, much worse if the economy were to crack. This is definitely something you should be watching. Now, if you are seeing economic weakness, tell me what your industry is. Tell me what you're hearing. Tell me in the comments. I would love to hear what you are experiencing on the ground. Could this just be isolated to Nashville? I don't believe it is, because Redfin is also reporting national pending sales down 2.2% versus the last week. And this is the first weekly decline they've reported in a month. So Nashville is moving with the country. Now, the third question is this just a reversion to the mean? And I think the answer is partially yes for now. April and May contracts were up about 12% ahead of last year. When you run that hot into the summer, part of that is pull forward of demand. People were jumping in that may have bought now. And that's the exact lens you need to view the $2 million market in. Contracts above $2 million went from being up 17.6% to down 15.9% in 4 weeks. 90 now versus 107 last year. Most of the buyers do not need mortgages, even if they get them. So last summer, the luxury market was surging as the tariff uncertainty became clear. Against 2024, these contracts are still up double digits. But there is a migration concern. John Burns Real Estate and Consulting just published a visual that shows that Nashville migration is starting to run slower than last year. Now, I emailed Eric Finnegan, who runs that research, and asked him directly, is this a negative migration or just slower? And his answer word for word was, it's slower, not negative. This means that there are fewer relocating buyers right now. This could mean fewer million-dollar contracts. Personally, I think it's just base effects. I'm very bullish on the migration, even as it's starting to show that it's slowing down. We've got Tennessee's in talks with Paramount to move to Nashville. There's constantly companies looking to move to Nashville. So I think any slowdown in migration is a temporary slowdown, but with contract volume dropping, we definitely need to be paying attention to it. This question comes from Sam Jaber. I hope I said your name correct. Can you do Brentwood next? Specifically, $1.9 million across the street from Brentwood Middle School. Trying to sell my house. Kind of nervous, scared face. Well, I looked up this house, 1.9, right across from Brentwood Middle. I actually love this area, but how do you know what it's worth? So this neighborhood is in Brentwood, so let's go on down to Brentwood here. Here we got Granny White Park, awesome park by the way, Brentwood Middle School, and it's right in here. We can see prices have dropped in this area, but let's take a look at it. Last year, there were 17 active with 4 under contract. This year, there's none under contract. Not a great sign for demand. And what we see here, this is actually a buy signal. Sorry, Sam, this is a buy signal. What we see is that active listings are spiking while contract volume is dropping. That would be a buy signal. I would tell my buyers to lowball you. Not trying to be offensive. I'm just letting you know what I would do. So let's take a look at this particular property. Okay, so this is 6 bed, 4 full bath, 2 half baths, 5,200 square feet. It's $359 a foot, $1.9 million between 50. It's 5,200 square feet, so it's going to be this size. It's actually the lowest priced house on a per foot basis. Prices in this range have been steadily going higher. This house was purchased in August of 2025 for $1.645. So I'd really want to know why you bought it for $1.645. Is it the lot? Is that the reason you got such a good price on it to begin with? Why should you get outsized depreciation? Is there an upgrade list? Is there something I'm missing from the property? There's a lot of questions I would be asking before I really gave a value on this property, but I would be starting with what general appreciation is in Williamson County, which is 2%. Now, last question, and this is the one that I keep coming back to. Do you think migration is actually slowing? Leave a comment. I read all of them. I love what you all have to say. You give me insight. Now, be careful out there. Pay attention. Use data. And with that, I hope you all have a great rest of the day. I look forward to seeing you next Saturday. Thanks for watching.